We are joined for more on U.S. equities by Bloomberg's Vince Signorella. Vince, always great to see you. I beg your pardon. I think we've got Stephanie Hughes first. Sorry, Bloomberg's Stephanie Hughes. I'm sorry, Stephanie. I would never get you two mixed up. Talk to us briefly about EQB, would you? That's been a darling among investors, but down sharply today.
Of course, Andy. So yeah, like you mentioned, EQB fell as much as 12% today, which was its biggest intraday drop since 2020, the depths of the pandemic. And this came after an earnings miss that was fueled by higher loan losses and higher expenses. And this is precisely why National Bank analyst Gabriel Dechaine downgraded the company to sector perform from an outperform rating, which is basically the equivalent of cutting to a hold from a buy rating. He also cut the price target to $95, and not only that, but he expects that higher expenses will be a persistent drag on earnings, just given that EQB is investing more on building out its brand and investing in technology. Manny Grauman from Scotiabank had a bit more of a forgiving tone. He called it a modest negative, noting that this was a rare miss, like you mentioned, because, or you mentioned that it was a darling among investors. This was actually a rare miss after 5 straight quarters of beats, so lots to chew on there.
Talk to us about Kinaxis, the software company. What was the story there?
Sure. So another worst performer, or one of the worst performers on the TSX, Kinaxis fell as much as 10% today, and it is a enterprise cloud computing provider. And this was an area that analysts flagged as something of a problem area, as there are macro headwinds for enterprise client spending. In this case, this came after a slight earnings and revenue miss, but I think investors are mostly focused on the fiscal 2024 guidance miss. The company is now expecting earnings growth range of 17 to 19%, which fell short of what Scotiabank was expecting, which was around the low 20% range. So that prompted a price target cut to $225. The silver lining, though, is that this Scotiabank analyst said that this pullback could provide an opportunity for investors to jump in at a lower price point.
And then finally, Stella Jones, railway ties, utility poles, lumber. This was a high flyer. It's still up more than 50% in the past year, but losing altitude today.
Exactly, yes. So the Stella Jones fell about 12%, or as much as 12%. The utilities pole producer, fell short of expectations. And this was mostly because of revenue declines, specifically from the residential lumber and industrial product sales, both falling from or by double digits from a year ago and missing analyst estimates. That said, the company did hike the dividend by 22%. So we'll be keeping an eye on shares to see if analysts or investors kind of warm up to the company here.
Stephanie, it's always great hearing from you, and thanks very much indeed. Stephanie Hughes of Bloomberg.